Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week, and we are starting from the dollar index. This is the weekly time frame. So here we have the monthly bullish fair value gap, and we saw how price mitigated the first weekly bullish fair value gap within the monthly bullish fair value gap after price took out this sell side liquidity and also took out this previous weekly candle sell side liquidity. So we identified the bearish fair value gap, and within the bearish fair value gap here in the weekly time frame, we spotted out this inversion fair value gap. So this were the sponsorship zone we marked out. And last week I gave us two scenarios where we could see price straight to the upside to take out the previous weekly candle here, the high, and then we have bearishness, or we could see bearish continuation to the downside, and then we could see bullish reaction, which I pointed out in lower time frame. And what we can see in this particular price delivery thus far for the week that just ended, we can see price continued bearish to the downside, taking out the sell side liquidity. So we can see that price still returned to the first weekly bullish fair value gap within the monthly bullish fair value gap. So if price was going to trade more lower last week, we're looking forward to the second weekly bullish fair value gap, which is within the monthly bullish fair value gap, because this is in confluence also to the mean threshold of the monthly bullish fair value gap. And clearly now what you can see is price here swept last week sell side liquidity, and we can see that this weekly candle gave us an up close week and volume closed above this previous weekly candle high points. Now we can see price have traded into the weekly bearish fair value gap. Price has taken out sell side liquidity, still respecting the first bullish fair value gap within our monthly fair value gap zone. So for the coming week, I'm looking forward to the possibility of price trading more higher into this weekly inversion fair value gap, which is within this weekly bearish fair value gap. So clearly I'll be expecting to see the possibility of higher prices in the dollar index, since we have this zone as the drawn liquidity zone, which is within this weekly fair value gap zone. We can see here volume failed to close below this previous weekly candle low points. We have the sweep of the sell side liquidity, price mitigating the weekly bullish fair value gap the second time, and now we can see impulse to the upside, and we have an up close candle week. So we can see the possibility now of more bullishness to the upside into the inversion fair value gap. This is going to be the first sponsorship zone we'll be looking at if we have the bullish continuation. So this is the narrative in the weekly time frame. So let's check the daily time frame. Here in the daily time frame, what we can see clearly is the sweep of the previous week low points. We can see also in the daily time frame. We identify that from the weekly time frame, and here in the daily time frame we can also see that we have the sweep of that. Volume did not close below this candle low points. Now we can see we had bullishness. So this was the delivery on Monday, Tuesday, and from Wednesday we started seeing bullish reaction. So we can see that here we had a rejection that gave the probability of price continuing bearish, but then we can see Thursday gave us bullishness, Friday bullishness. You know, in the last week forecast I said price gave us what? Buy side liquidity here, and we could see price purge those buy side liquidity. This is the inversion fair value gap from the daily time frame. The previous week we saw price traded into that inversion fair value gap, and this was Friday's candle. So from the lower time frame, I told us to see the possibility that we could frame bearish continuation, or we could see price trade higher to take out this buy side liquidity, and then we could see price push more into the inversion fair value gap. But what we can see is that price traded to the downside back into the weekly bullish fair value gap, and now we are seeing bullishness to the upside back into this daily inversion fair value gap. And what we can clearly see is that volume here closed above this buy side liquidity we identified last week, and also now we can see volume have closed above this previous daily candle, Thursday candle high, and volume have closed above the mean threshold of the daily inversion fair value gap. So we could see the possibility of bullishness into the weekly inversion fair value gap. So we have to wait to see how price trade into the weekly inversion fair value gap. If that gives us a bearish reason, then we can take our bearish movements to the downside. And then if price keeps giving bullishness, then we trade bullish to the upside. So let's check the 4-hour time frame. What we can see also in the 4-hour time frame is how price swept this low point. Volume failed to close below that. So we had this up close candle that sponsored the bearishness that took out the sell side liquidity. We have volume traded above that with impulse. Price returned to mitigate this breakout block in confluence to this fair value gap, and we can see bullishness to the upside. Now we can see clearly that we have this bearish fair value gap. Price return mitigated that bearish fair value gap, fell, but failed to continue bearish. And then we had a reverse to the upside. Price retested the bearish fair value gap here in the 4-hour time frame as an inversion fair value gap. We had bullishness to the upside. Price again returned, retested, and pushed further to the upside. So we could see what the bullish continuation into this weekly inversion fair value gap. And here we can see we have this bearish fair value gap here in the 4-hour time frame. Let's check the daily time frame. In the daily time frame, we can also see that we have this bearish fair value gap. So let's get back to the 4-hour time frame. So in the 4-hour time frame, what we can see is we have this mitigation block and we have this bullish fair value gap here in the 4-hour time frame. So if price possibly trades to the downside, then I'll be looking forward to see how price trades into the zone. If price trades into the zone, then we can see the possibility of price giving us a bullish reason to continue bullish to the upside. But then if price trades back into this mitigation block zone and price violates this zone, then I'll be looking forward to have bearish continuation to the downside. So this is what I'll be looking at in the dollar index. Or we could see the possibility that price may just continue bullish, break through the zone entirely, and then possibly return to retest and the bullish continuation to the upside. So I'm showing us the probabilities, the possibilities that may take place in the markets. So clearly for price to keep going higher, for this particular price delivery, it means I'll be making reference to this down close candle that sponsored the bullish continuation. Basically, I mean, I'll be making reference to this down close candle, meaning if we have bullish continuation, if price return, then I want to see how price reacts here, respect the zone, and then gives us bullish continuation. But then if price decides to go bearish back into this mitigation block zone in confluence to this bullish fair value gap and gives us a buy model, then we want to buy to the upside. Except price violates the zone, then we can consider going bearish to the downside. So this is what I have to show us, guys, in the dollar index. Let's check the 1-hour time frame if we could frame any sponsorship zones from the 1-hour time frame. So here in the 1-hour time frame, we can see the bearish fair value gap we identified from the 4-hour time frame acted as an inversion fair value gap. Here we have this up close candle that sponsored this bearishness to the downside. Price return, it reclaimed price, sent price upward. Price came back to the downside into the inversion fair value gap, and here we are seeing bullishness. So what we can see here is we had this pullback, price pushed to the upside, fell to the downside. Price took out the sell side liquidity, bullishness, internal market structure shift here. So we have seen that price return to retest this breakout block. So we could see what bullish continuation into the weekly inversion fair value gap. So this is what I have to show us, guys, in the dollar index. This is just a quick one. So let's check out the Euro USD pair. This is Euro USD and this is the weekly time frame. So last week we marked out the bullish fair value gap here, and we can see also we have this inversion fair value gap and also this inversion fair value gap. So clearly I called our attention to the monthly bearish fair value gap And within the monthly bearish fair value gap, we have the weekly bearish fair value gap. And that was where price mitigated. And we had this weekly candle. Price took out sell side liquidity, took out also the sell side liquidity. So, last week I told us that we could see the possibility of price taking out this previous week low points, the sell side, and we have bullishness to the upside. But then we went to lower time frame and framed the possibility of price just continuing bullish into the zone again. And that was what clearly happened. And when price returned back into the zone, we can now see price gave us bearishness and took out this weekly candle low points. First, we can see price went to the upside, took out the buy side, and now we are having a down close week. Just the way we can see in the dollar index, we have an up close candle for the previous week. That is this particular week that just passed. So what we can now see here is the possibility of us having bearishness to the downside from the weekly time frame. So clearly we can see that price traded into the weekly bullish fair value gap. But within the weekly bullish fair value gap, we have this weekly inversion fair value gap. And we also have this weekly inversion fair value gap. So clearly our draw on liquidity is to see how price may trade into this weekly inversion fair value gap. And then we could see bullishness, or we could see how price trades into that. If price gives us more bearish reason, then we trade bearish more into the second weekly inversion fair value gap. So let's check the daily time frame. So this is the daily time frame, and I pointed out towards how price came into this bearish order block, and price was facing rejection, a resistance, but then price further went to the upside and took out the high, took out the buy side into the weekly bearish fair value gap, which is within the monthly bearish fair value gap zone. And now we can see that this was Friday's candle. So I told us that we could see price straight to the downside, take out the weekly low points, and we have bullishness to the zone. All we can see is Monday traded, Tuesday traded back into the zone bullish, which we identified the bullish reason in the lower time frame. I showed us the possibility of that last week forecast, and we can see clearly price traded there. And now price has taken out this buy side liquidity. Volume did not close above this last week high point, and then we can see now price sponsored bearishness and took out the low points. So we have the weekly inversion and this other weekly inversion within the weekly bullish fair value gap. And here in the daily time frame, what we can see is this daily bullish fair value gap, and we have the two inversion fair value gap within this daily bullish fair value gap. So we've identified the draw on liquidity, the internal range liquidity. We have this bullish fair value gap here in the daily time frame, and within that we have this inversion, the weekly inversion fair value gap. So what we can see in this first weekly inversion fair value gap is where we have the manipulation. The institutions bought and then sold from here. So this is an institutional level. So we could see price continue bearish to the downside before we could see bullish continuation, or price may further continue bearish to the downside. So what we can see is price swept this high point and bearishness. Here we have a change in state of delivery. So we could see further bearishness to the downside. Since what we can see is this is the sponsorship zone. So we could see price dip more lower to the downside. Let's check the 4-hour time frame. Here in the 4-hour time frame, what we can clearly see from the 4-hour time frame is this. So, last week I pointed our attention to this 4-hour bullish order block, how I already had entry here. First, from the 1 hour, we had this bullish order block within this week. Price rated my stop loss, but then I reframed another entry to continue bullish, which I called our attention to in last week forecast and told us where we could see bullishness to the upside. And we can clearly see we had that bullishness Monday, Tuesday, before Wednesday we started having bearishness to the downside after price returned again into the weekly bearish fair value gap within the monthly bearish fair value gap. So what we can see here is price return into this bullish fair value gap, and we had bullish reaction, and now we can see price mitigated this mitigation block, and bearish impulse, violating this bullish fair value gap. Price return, retest as an inversion. Now price dropped into this bullish fair value gap. Here we have this down close candle that sponsored this bullish movement to the upside. So price has taken out the sell side liquidity, and price mitigated this 4-hour bullish fair value gap. And we can see this is last 2 weeks low points. Price swept the liquidity, and we can see price mitigated this bullish fair value gap, rejection to the upside. Price respecting the mean threshold, the consequent encroachment of this bullish fair value gap. So we have to wait to see if price gives us buy reason. Then we know that price would want to trade to the upside, and we'll be looking at how price reacts at this inversion fair value gap. And if price further push to the upside, then we have this drawn liquidity, this bearish fair value gap. So how price reacts here would help us determine if we're going to have bullishness to the upside, or we could see price react here and we have bearishness to the downside into this weekly inversion fair value gap. So this is what I have to show us in the Euro USD pair. Let's check the 1 hour time frame. What we can see is the 4-hour bullish fair value gap, and we are seeing price traded to the upside. Here we have this rejection block. So clearly what we'll be looking forward to is we would look forward to see bullishness. If price gives us bullishness to the upside, yeah, we want to trade bullish to this rejection block, because clearly this is the 4-hour inversion fair value gap. Price took out this buy side liquidity, swept that high point, and we had the fall to the downside. So we want to see how price trade bullish, if this is going to continue bullish and not just head straight to the downside. They'll be looking to see how price trades into this rejection block, and from this rejection block, price may give us a bearish reason, or we could see price now trade above that to the 4-hour bearish fair value gap, which we identify here as the drawn liquidity. So that would help us to determine if price is going to continue bullish, then we ride on to a bullish movement, or we could see bearishness to the downside. So clearly it means that, let's see what I'm trying to tell us. So what I'm trying to say is, if we don't see that price continues bearish to the downside, then we would want to see how price gives us bullishness to the zone, which in the 1 hour would identify that we have the rejection block. So the rejection block might give us a reaction that would make price to trade into this bearish fair value gap. So from this bearish fair value gap, we would have to look forward to see if price gives us a sell reason, then we are selling to the downside. But then if price gives us bullish reason, then we continue bullish. Let's check that from the 1 hour time frame. This is the 1 hour time frame. So clearly what I'm trying to point out to us is this: if we do not see price continue bearish into the inversion fair value gap, so our anticipation is to see how price trade into the rejection block zone. From the rejection block zone, we may have bearish to the downside, or price may react and trade into the 4-hour bearish fair value gap, and we have the bearishness, or we could see price continue bullish. So the thing is, when you are trading, you have to follow the narrative that price is given in the markets. You get it, guys? We have to follow the narrative. So we have to trade bullish here. You can decide to trail the stop loss if price gives a bullish reason from far lower time frame to trade bullish. This rejection block. The rejection block may give us bearishness to the downside, or we could see bearish reaction, but then price may continue bullish into the 4-hour bearish fair value gap. So what we can see is we have from the 4-hour this bearish fair value gap. So meaning if price respects this zone, because this is a down close candle that gave us this bullish movement, here we have this fair value gap. Price has taken out this sell side, which is the previous 2 weeks low points, and now we can see volume respected the bullish fair value gap last week, and we can see the rejection to the upside. So what I'm saying is this: based on the 4-hour time frame, this is the drawn liquidity to the upside, this bearish fair value gap. So what I'm saying is we have to wait to see if we're going bullish, then we want to trade to the zone first. So this zone would help us determine if we're going to continue bearish from this zone or price may keep going bullish. That is what I'm trying to point out to us. So, or we could see that price may just give us bearish continuation into the inversion fair value gap, because price reacted at the sponsorship zone, the weekly bearish fair value gap. Price reacted, fell to the downside. Price returned, reacted at it again, and we're seeing this fall to the downside. So we could see bearish continuation to the downside into this inversion, because the inversion fair value gap, when we go to the daily time frame, we can also see is in confluence or within the zone of this daily bullish fair value gap that we have here. So we are framing the possibilities that we are likely to see in the markets. So let's check out the GBPUSD here. This is GBPUSD, and this is a weekly time frame. So what we can see last week, I made reference to this candle where we saw price mitigated the mean threshold of this candle week, though we have that the candle doesn't really have volume. So what we can see is this was the mitigation of that, and we can see price took out buy side liquidity, volume closed below this previous weekly candle, and we identify the weekly bullish fair value gap, and within the weekly bullish fair value gap we identify the weekly inversion fair value gap. So just like the Euro USD, we look to the possibility that price may take out this previous weekly low points, and then we have bullish continuation. But then in the lower time frame, we saw zones that pointed out the possibility of bullishness to the upside, and that is what we can clearly see happen here. Price left the sell side liquidity, the previous weekly candle low points, and price went for the buy side, took out the buy side, and we can see we have a down close week. So clearly the drawn liquidity to the downside basically is the bullish weekly fair value gap. Within the bullish fair value gap, we have the inversion fair value gap here in the weekly time frame. So clearly now we'll be looking at the possibility of price trading to the downside to take out this low into the zone, into the bullish weekly fair value gap zone. In confluence is this weekly inversion fair value gap. So we're looking at the possibility of further push of price to the downside to take out the sell side liquidity into the zone. So let's check the daily time frame. What we can see from the daily time frame is, last week I pointed to this daily bullish order block, and I told us to see the possibility that price may also dip lower into the mean threshold, because we saw how price did not mitigate really the mean threshold of that bullish order block from the daily time frame before we could see the possibility of bullishness. But then in the lower time frame, we saw how also price took out sell side liquidity, and then I told us we could just see bullishness to the upside, which clearly in the daily time frame we can see the rate of the sell side, and Monday gave the bullishness through Tuesday. Wednesday also gave the bullish movements, but then price gave what? The sell movements through that Wednesday down to the downside here on Friday. So what we can see is the weekly bullish fair value gap. And clearly here in the daily time frame, where we have the weekly inversion fair value gap, we have this daily bullish fair value gap. So price took out this high point, but now we are seeing bearish impulse. Here we have a change in state of delivery because price have violated this order block, or you could call it a proportion block. Clearly now we can see that price is respecting the mean threshold of this bullish order block. But then we have price being attracted to the sell side liquidity, and we have this internal range liquidity from the weekly time frame. So we could see the possibility of bearishness to the downside in the GBPUSD, since we are anticipating the possibility of what? Bullishness in the dollar index. Let's check the 4-hour time frame to have more better picture again to this. So what we can see in the 4-hour time frame clearly is price return into this 4-hour bullish order block. Here we have the down close candle before this bullish movement to the upside. Price drop, took out all of this sell side liquidity. Now what we can see is that price have traded above the mean threshold of this 4-hour bullish fair value gap, and we have the order block here, the down close candle before the bullishness. So in the 4-hour time frame, if price continues bullish to the upside, then I would want to see how price trade bullish to the upside. price may react at this fair value gap, and then we have bearishness to the downside into the weekly bullish fair value gap, where we also have the inversion fair value gap. And we can see we have this down close candle before the bullish movement, and we can see price has not taken this weekly low point, but in the Euro USD, price has taken the weekly low points. So this is what I'll be looking forward to see, the possibility of this in the GBPUSD pair. So if price decides to violate and not really gives us bearishness to the downside, then we'll be looking for the continuous bullishness, which means we're going to have a different narrative to be seen in the dollar index. So let's check the 1 hour time frame. Let's look at the 1 hour time frame. So here in the 1 hour time frame, what you can clearly see in the 1 hour time frame is we can see the 4-hour bullish fair value gap, and where we have the 4-hour bullish order block. Here we can see the 1 hour bullish order block, the down close candle before this bullishness to the upside. Price has taken the sell side liquidity from the 4-hour. Here in the 1 hour, we can see that volume close within the bullish fair value gap, but that is not what we saw in the 4-hour time frame. So clearly now here we can see price traded back into this bearish fair value gap, and we had the fall to the downside, and price has given us this rejection block. So from the 1 hour time frame, clearly I'll be looking at the possibility that if price trades bullish, then I want to see price trade into this rejection block zone, and price may give us a sell reason to the downside. And if price decides to continue to the downside, they will be looking to bearishness to the downside into the sponsorship zone, the bullish weekly fair value gap, which within we have the weekly inversion fair value gap. So this is clearly the scenario I'll be looking out for in GBPUSD, except we have this third scenario where price may give us the bullishness, react at the rejection block here, and we possibly have a fall, and price may continue bullish. But clearly now, based on the delivery in the dollar index, I'll be looking forward to see the possibility of us going bearish in the GBPUSD, the Euro USD. But then we also have to pay attention to the fact that price is reacting at this bullish order block, which also we pointed the reaction in Euro USD also. That may give us bullish reason to the upside. And if price trades to the certain sponsorship zone we identify from the Euro USD, then we may have the bearish reason, or we could see price continue bullish. Same is applicable here in the GBPUSD. Here we have this rejection block because price traded into this bearish fair value gap here in the 1 hour time frame, give us impulse to the downside. Here we have this breakout block because here we have the fall, price pullback, price fell, took out this low, and then we had reason back to the upside, taking out this high, price fell. So we could see price trade into that zone and bearishness to the downside, or we could see price continues bearish to the downside. So these are the possibilities I am looking at in GBPUSD. The possibility of this happening, or price may continue to the upside, gives us a pullback, and then we continue bullish. So this is what I have to show us in GBPUSD. Let's check out the USDJPY pair. So this is USDJPY. So last week we can see USDJPY just gave us a clean delivery. I pointed out how price reacted at this weekly bullish fair value gap, and I told us we want to see how price trade into the mean threshold of this bearish order block. We saw the sell side liquidity sweep here, and price gave us an up close candle for the previous week. Now what we can see is last week now gave us the bullish continuation into the mean threshold of the bearish order block I called our attention to, and we can see volume closed above that. So basically we have this rejection block zone. So I want to see the possibility that price may continue to this rejection block zone. And if price doesn't react at the rejection block zone to sponsor bearishness, then we may see price takes out this buy side liquidity. So let's check the daily time frame. So here in the daily time frame, what we can see is the mean threshold we marked out from the weekly time frame. From the daily time frame, I told us we could see price sweep this buy side liquidity. Here in the daily, we have this rejection block zone. In a lower time frame, what we're going to see is a bearish order block. So that was why I said we want to trade bullish. Price takes out this buy side liquidity, then we could frame bearish reason to the downside. And what we can see is that price just respected that main threshold we pointed out from the weekly time frame. Price left the buy side liquidity. Price did not touch the buy side and price fell. Price now returned into this bullish order block, and we can see the rejection to the upside. Price took out sell side liquidity here. We are seeing bullish reaction. So price is being attracted to the buy side liquidity. So clearly from the daily time frame, it means that I'll be looking forward to see how price trade further to the upside, to take out this buy side into this daily rejection block zone. So from the daily rejection block zone, we can determine to see the possibility of price giving us bearish perspective, bearish structural delivery to possibly continue bearish to the downside. Since from the daily time frame, what we are seeing is a downward movement of price to the downside. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can clearly see is this is the daily time frame bullish order block, and what we can see, we have this breakout that price returned into to react, because we can see the fall, a pullback, price fell. It's a breakout block because this is the up close candle that sponsored this bearish movement that took out this low, and price gave this impulse. We have this relatively equal low point. Price traded to our mean threshold of the bearish order block we identified from the weekly time frame, leaving this buy side liquidity. So you can see the rejection block zone in the daily time frame. In the 4-hour, we can see we have this bearish order block. So meaning the drawn liquidity clearly now is this buy side drawn liquidity, and we have this bearish order block. Price gave us this relatively equal low, fell to the downside, took out the low. Now we can see price giving us bull reason to the upside. We have this relatively equal high points, which is serving as drawn liquidity. So I'll be looking forward to see how price will purge this buy side liquidity. We have this bearish order block. So we have to wait to see the reaction of price at the bearish order block. If price gives us in a far lower time frame bearish structural perspective, then we go bearish to the downside, or price may continue bullish into this unmitigated institutional order flow zone. Clearly from this zone here, we can see that we have this buy movement that took out this buy side liquidity. So clearly you can see we have this institutional order flow here. The last buy move before the sell movements to the downside that validated the break of this low point. So meaning if price doesn't respect this bearish order block, then we may see further bullishness into the zone. So this is what I have to show us, guys, in the USDJPY pair. So let's check out the gold pair, guys. Here we are in gold, and this is a weekly time frame. So what we can clearly see is the weekly bullish fair value gap where price return mitigated and gave us the bullishness to the upside. And what we can see is that this weekly candle, we have volume close above this previous weekly candle, and we have the bullish fair value gap here in the weekly time frame. What we can see from gold is we could see the possibility that gold may just continue bullish. And mind you, this is top-down analysis. We're trying to check the higher time frame narrative so that we can be able to utilize the higher time frame narrative in lower time frame price delivery, so that we can use lower time frame structural perspective to be able to frame entries. So it is always right and okay to have a weekly perspective from the higher time frame, but then utilizing the lower time frame like the 4-hour, the 1-hour, the 15-minute, the 5-minute time frame, looking at the structural perspective here to execute your trade, but with the higher time frame narrative in mind. So what we can see is the weekly bullish fair value gap. So are we saying that we have to wait till price drops into the weekly bullish fair value gap before we frame an entry? No, because when you go to higher time frame, you may find zone that would give you a reason to continue bullish, but we just want to check the higher time frame so that we can have a higher time frame narrative. Because now we can see here volume closed above this previous weekly candle, so we could have the bullish continuation. Here you can see here we have price here swept this weekly high points, but then volume closed below it, creating this bullish fair value gap. But we can see that this weekly candle did not trade back into the fair value gap. It continued bullish. So that is the possibility we can see here. We can see the possibility of it just continuing bullish, or price may dip into the weekly bullish fair value gap and we have the bullishness to the upside. So let's check the daily time frame. So here in the daily time frame, so what we can see in the daily time frame, this is our weekly bullish fair value gap, and you can see it in the dailies, also the daily bullish fair value gap. But in the most recent price delivery, what we are seeing is that price created this daily bullish fair value gap, and the market has traded into that, and we can see rejection to the upside, closing above the daily bullish fair value gap. So we could see the possibility of continuous bullishness to the upside without price necessarily having to drop into the zone before we have the bullishness. So except possibly you want to allow Monday to trade. So when we have Monday delivery and Monday delivery decides to close below this daily bullish fair value gap, then we know that price has the possibility to fall back into this weekly bullish fair value gap, which is in confluence to this daily bullish fair value gap also. And then we have what's the bullish continuation to the upside, because here we can see this is the last swing high points, and this created the breakout zone because this one saw bearishness back into the weekly bullish fair value gap, taking out sell side liquidity here, and we have this bullish movement to the upside. So let's check the 4-hour time frame. Here in the 4-hour time frame, what we can see is the rally, the base, the rally. Sell side liquidity taken by the movement to the downside. Price return into the base level, the accumulation level, and now we are seeing bullish reaction. So we could see the possibility that price may just continue bullish to the upside. That is what we could see. Or we could see that price, then if price is attracted to this internal range liquidity, they will be looking forward to see how price may possibly trade into this bearish fair value gap. And then we have the possibility of price trading here before giving us the bullish movement. So you have to have an open mind in the market and not really be rigid with the market. So if the market opens on Monday and gives us what? Buy reason, also violating this bearish fair value gap, then we'll continue just bullish to the upside, because clearly here we have the single candle order block. Those in the mentorship program will clearly understand this and how to frame the model in the lower time frames. So if price continues bullish, basically now with this model, we would really want to trade to the upside and trading the stop loss, aiming at this bearish fair value gap, which there's a possibility which I'm seeing that price may not really respect this and it may violate it and go bullish. But then if price respects it and gives us bearishness, then we know that we are trading bearish to this sponsorship zone, with the possibility to also frame bullishness from this zone to continue bullish, since gold is heavily bullish. So this is how you have to trade. You have to trade with flexibility in your mind. So this is what I have to show us also in the gold pair. We'll be utilizing this information in the lower time frame, like the 1 hour, the 15 minutes, the 5 minutes, to also be trading what we are seeing based on the delivery that price will begin to deliver from Monday through the week. And this is what we now want to use as our framework for trade execution, guys. So I'm wishing you guys a profitable week. I see you guys next week again. Cheers and God bless you all.